Good morning, everyone. I'm Paul Chambliss, Vice President of CABI, broker at Front Range Business Incorporated. We have a distinguished panel this morning to speak about PPP, loan forgiveness, 7A loans, and issues that we're having with our transactions. Steve White from the SBA, Tonya Mazurek from Midwest Regional Bank, Don Hobbs from Front Range Business, Kim Rivero from Front Range Business, and Julian Isbicki, sustaining sponsor with Isbicki and Langer Law. To start off today's session, Tonya is going to introduce Steve White from the SBA, and we're going to give Steve the first section of this presentation. Take it away, Tonya.
Hey, thanks, Paul. Yes, I'm Tonya Mazurek with Midwest Regional Bank, and Steve White has been my ongoing guru for years now in SBA. He's the team lead here in Colorado and basically has all the knowledge that I can find, if there is knowledge out there when it comes to SBA and if there's any questions. So Steve, would love to get your information today on PPP loans and any kind of new thoughts out there when it comes to forgiveness. So.
Thank you, ma'am. Very generous, especially with the guru part. Good morning, everyone. Steve White, United States Small Business Administration. I am the lead lender relations specialist for the Colorado District of the Small Business Administration. So basically, my job, hopefully, is to help you do your job and make things easier when it comes to getting access to capital. This morning specifically, I want to address just a couple of things, quick updates in our world. As we're all more than aware, the Paycheck Protection Program, or the PPP, is dominating our thoughts and minds and efforts right now. But before we talk about that, just a real quick blip on the Economic Injury Disaster Loan, or commonly called EIDL. The EIDL Advance, that program has come to an end. It officially sunset over the weekend, so there will not be any more EIDL advances. If you have questions about that, we can talk about that offline. I think you'll have my name and contact information. Having said that, the EIDL loan, the Economic Injury Disaster Loan itself, is still open for business, so you can apply for that. Now, moving on, for the Paycheck Protection Program, or the PPP, that is still in business, and it's open now until August, so August the 8th. So for us in Colorado, it'd be open till 10 p.m. Mountain Time. So get your applications in by then. And just quickly, some facts and figures that I think you'll find interesting. Nationwide, we've been able to make, since the inception of the program, over 4.9 million loans at an amount of $5.2 billion with a B dollars. So we are actually $520 billion. And using that, we've been able to use 5,461 lenders in the process. I bring that up simply because during a typical or average SBA year, we use about 1,800 lenders. So in this process, we've actually tripled our lender activity. And I say that to say that lenders in your community, lenders near you, are and have participated in this loan program. So that's a big deal. That's getting everyone involved. And I think it goes against the grain of some of the quote unquote national stories that we hear. Other interesting facts, right about 3.2 million of these loans were under $50,000. Those of you in your community know that any commercial loan made under $50,000 is classified as a microloan. This loan program was not intended to be a microloan program, but a good amount of those were at that level. So I think we've done a fairly decent job at servicing everyone and keeping folks from falling through the gaps wherever possible. Now, to bring it down, here in Colorado, as of July 11th, there have been over 105,000 PPP loans valued at about $10.4 billion since the inception. The average loan size in Colorado is just under 100,000. That's comparatively with the U.S. average, which is right at 106,000. So Colorado is getting its fair share. 87% of all PPP loans in Colorado were made at $150,000 or less. So a large portion of those loans were small loans to very small businesses. And just under 95% of all loans in Colorado were made at $350,000 or less. So again, that goes a little bit against some of the national narrative that we've been hearing out there about large businesses or undeserving businesses getting the loans. The numbers say that that's just not true. Also, most importantly, these loan programs have helped us keep 1.7 million jobs here in Colorado. And I'm pretty proud about that. And lenders or folks who are associated in the lending industry on the call should be proud about that too. So well done, everyone. Some updates since the passing of the Flexibility Act, which kind of brings us to where we're at today on 14 July. The PPP loan program, again, is open until August 8th. The loan forgiveness period to utilize your funds has been extended from 8 weeks to now 24 weeks. So you have 24 weeks to use your PPP loans. The maturity has been extended from 2 years to 5 years. So if you're not able to fully utilize all the PPP funds and it goes to a loan, you now have 5 years. And again, that same 1% interest rate for loan payback. The deferral on that payback period has also been extended from 6 months to now 10 months. So we've done a lot to make sure that the business owner has the best ability to be in a good position to take advantage of this program, regardless of their ability to spend all the funds in that time or not. The Flexibility Act also lowers the requirement that 75% of a business owner's loan proceeds must be used or spent for payroll costs from 75 down to 60%. So prior to the Flexibility Act, you had to spend 75% on payroll. We're now saying we'll run your forgiveness at 60%. Spent on payroll. The Flexibility Act also broadened the safe harbor provisions for calculating full-time employees or FTEs. Some of these safe harbors are if an employee voluntarily reduces his or her hours, if an employee decides to retire, if an employee quits, if an employee has a required hour reduction that was stated by or stipulated by your local or state authorities for the COVID-19 response, if an employee was fired for cause, or simply if an employee just refused to come back to work after you got the loan and you wanted to put him or her back to work and they decided not to. As long as you can document any of the above, none of those will count against your full-time equivalency requirements to get you 100% forgiveness. So that's nice too for the borrower. There are now two different forms. We have the long PPP loan forgiveness form, and we have the short or the easy PPP loan forgiveness forms. And these forms act a lot like filing your taxes. Many of you are familiar with you file the initial set, and then you file along with that set a schedule, and then of course you have an accompanying worksheet to help you file the schedule. It helps you file the actual taxes, and so these forms work sort of like that. The easy application, for those of you who are interested, is for the self-employed borrower, the sole proprietors, 1099. Contractors, single person LLCs. Basically, it's just you and you have no employees. Or if you do have employees, and if the salaries and wages of your employees were not reduced more than 25%, and you didn't reduce the hours of your employees, you can file the easy. And of course, the exception would be if you experience reductions in business activity and the ability to hire employees to keep them on board because of COVID-19 sanctions. So you had to reduce the hours of your business. If that applies, then you file a safe harbor there, and you can still file the easy form. Having said that, so if filing either the easy or the long, as soon as you, the borrower, think you have spent 100% of loans, please submit your application. You do not have to wait for full 24 weeks. Make sure that you can, when you do apply, that you've spent 100% so you can get the 100% forgiveness of your loan. Once you submit that, the lender then has 60 days to review your loan file before submitting to SBA. And for lenders who may be on the call, we are still awaiting guidance for your portion or the methodology for lenders to submit the application piece once they have that from the borrower. So we realize that we've promised that, and we're about 2.5 weeks now from the promise date of delivering that. So a little behind. So appreciate your patience as the SBA figures out the digital mechanism for making that submission. So that's basically the brief I wanted to talk about this morning, but we've had another pressing question that I understand is going to be a large concern for many on the call. So I'll go ahead and address that question first. And the question is, a borrower has a PPP loan in place and then decides he or she needs to sell that business to another buyer. So someone wants to buy a business that has a PPP loan in place. What do? Can you do it? The answer is yes. This is a transaction that can be facilitated. A PPP borrower may sell his or her business during the period when the PPP loan is outstanding and before forgiveness has been granted. We would recommend that you don't do it. And borrowers, I would point back to you, when you applied for this loan, you certified on your loan application that you were getting this loan with the intent of using the funds to cover payroll costs. And the point of the loan was to keep you in business during the COVID-19 scenario. Regardless of how you feel about statutes and limitations of COVID impositions, and regardless of how you feel about masks and things like that, the fact is this is a loan and you signed a certificate stating this was your intent. SBA, however, understands that real life things change and we can't possibly grasp all the different variables in the business transaction world. So it is going to allow you to sell your business even though you said you weren't. Now, in such a scenario, the seller and the buyer must work with the lender. And the lender has to agree to work with the seller or the buyer to have the buyer assume the PPP loan and continue to use any remaining PPP loan proceeds for payroll costs and other eligible payments of mortgage, interest, rent, or utilities in accordance with the PPP requirements. Now listen to me. If you're going to do this, it is going to be incumbent upon both the buyer and the seller to be able to account for every single penny of those loan proceeds to show that they were used in accordance with the program, especially as you move between either the asset or stock sale of your program. So make sure you can document that transaction. If the buyer then applies for loan forgiveness, the buyer will be subject to all applicable reductions and any issues related to eligibility that would have applied to the original seller and original holder of the PPP loan, including the possibility that forgiveness may be denied in whole or in part. Only the buyer would be able to apply for forgiveness in this scenario. Further, if this change of ownership is to be transacted or funded with an SBA loan, the loan must be submitted by the lender for non-delegated approval. So you're going to have to request permission from Sacramento first before you put this loan through. You would not be able to use your delegated or preferred lender delegation to make designation to make that transaction happen. So I think I've tried to answer that as succinctly as possible, and I'll stay on the call for any other questions that you may have. If I can't answer those questions, I'll see if I can gather the answers to those in a singular email. And if it's okay, Paul, Tonya, I'll send those answers to you, and that way we can get them out to the folks. Thank you so much for your time and attention.
Steve, thank you very much, and thanks for continuing to stay on the call. I'm sure that there are a lot of questions. Our panelists are live, so they can ask questions of you. All the other attendees, please use the chat function. I know Merle's already submitted a question on the chat. Do the panelists have any questions of Steve right now?
I do. So Steve, let's assume by the time let's just use arbitrary dates. Let's just say a deal is going to close September 1. And let's assume by the time September 1 rolls around, the seller has used all, let's say the seller borrowed $150,000, and let's say they've used all the money. They've had $150,000 of payroll, rent, and utilities. They've fully, by September 1, qualified for forgiveness. And let's say we want to do an asset deal. The question then is, can the seller sell and then apply for that forgiveness after the sale because they've already qualified? They've already had $150,000 of eligible expenses.
So it's going to depend on how it works with the lender, because keep in mind on the PPP loan program, these dollars are actually lender dollars. They're going to be paid a fee at a later date by the SBA. So the lender, first of all, has to be in agreement that it's going to allow for that transfer. So does that make sense? So it's going to depend on where the PPP loan forgiveness, what stage that's in.
Yeah, so again, let's assume for purposes of this conversation, it's done. That $150,000 of forgivable expenses have been incurred, that
Right.
payroll, rent, and utilities equaling or exceeding have been incurred by the seller as of September 1. They're fully
Right.
qualified for forgiveness. If they weren't selling their business, they'd be submitting their application, but they're trying to do a sale. So in that case, can they sell the business in an asset sale and then get consent of the lender for that transaction, and then after the closing submit their application for forgiveness?
Gotcha. They're going to want to get consent from the lender first. And
Right.
the reason, because if the lender decides, no, we're not going to transfer, we're not comfortable with the outside loan application. Because keep in mind, the lender also has a federal responsibility of due diligence, and there's some safeguards too put in place where they've got to verify citizenship and other security factors that the federal government has placed, fairly or not, upon the lender. So when this new borrower comes in, the lender's got to go through all the CSB requirements and to make sure those are. And if they're okay, then they go ahead and consent, and then they can move forward. And absolutely. And again, the key on that situation where you're talking about is the documentation of they can show that the funds were applied, they were spent in accordance with the eligibility proceeds, and it's just a simple a matter then of transferring, if you will, that loan to the buyer, so then the buyer can come and then apply for the forgiveness part.
Yeah, see, that doesn't, I mean, forgive me for this, I'm just a lawyer. I mean, but that doesn't actually make any sense to me. The buyer has their own loan, and buyer has, if this were a stock deal or a membership interest deal, I totally get that the buyer, by buying the stock of the seller, buying the LLC membership interest of the seller, would be stepping into the seller's shoes in terms of that loan and those loan proceeds. And we'd be talking about escrowing those funds and things of that sort.
Right.
But an asset deal where where the money's been spent, I don't get that that's going to become a buyer liability. I mean, have you seen guidance from up high that says on the sale that the buyer is going to take over that liability? Is that something you've seen?
No, the only guidance that we've received is that to ask our businesses to not conduct these transfers until the forgiveness period has been completed by the initial borrower. So it's an ask. It's not an official kind of thing. I agree. If I'm the lender and it's a stock sale, that's easy enough. If I'm the lender and it's an asset sale, I don't know that I'm going to agree with the transfer. I may still hold that buyer responsible. The borrower responsible.
So Steve, if I can jump in an asset sale, you've got two different tax ID numbers. You've got the seller's tax ID number and the buyer's tax ID number. Presumably, the PPP loan was made under the seller's tax ID number, and they would still continue to have that tax ID number post-closing of the sale. Why wouldn't that loan stay with the seller and be the seller's responsibility for application of forgiveness and eventual payment?
So it would, unless the lender agrees to make that switch. We've got a mechanism on our end to change an EIN. It can be done, but it has to be done through us.
I'm guessing the parties, the buyer and the seller, would not want to change their EINs. The seller would want to keep theirs for post-closing follow-up, and the buyer would want to originate a new entity entirely. And one of the reasons for an asset sale on the buyer side is that they don't take on the liability, contingent liability or other liabilities of the seller. So they're starting with a clean slate. So even though it's possible perhaps to switch or transfer EIN, it's probably not a real world scenario.
Let me clarify. When I say change the EIN, I mean in our application system, not from the entity standpoint.
Okay,
Yeah.
all right, thank you.
But Steve,
sorry.
just to clarify what you're suggesting, you've not actually seen SBA guidance about this. This is sort of something you're speculating on.
No, this is internal from the questions. So on our end, we've got the ability to push up to HQ when we get real world scenarios that don't fit into the neat loan scenarios kind of thing. So the guidance we have then is it comes from a bank. I believe it's called 7A PPP questions. I think is our bank where we get from. So that's the writing we have on that. It's not in an IFR. It's not in a SBA info publication notice. That's just guidance we've received to pass on to those who might be in this scenario.
But just to be, I mean, because what you're suggesting is different from anything I've seen. So I would, yeah, I mean, so could a deal be, I mean, would the buyer, are you saying that if we're going to do a transaction before the SBA issues forgiveness, the buyer has to assume the loan responsibility? You're saying that could happen,
No.
but have to. Okay. Yeah.
No. Now, if the seller wants to keep it clean and they want to maintain the loan, the one they apply for, they absolutely can.
Okay. Okay. That's great.
It's up to them.
Yeah, so Paul, should I proceed? Do you want to?
I would. Let's do that just a moment. Julian, proceed. Don would like to present his case study perhaps after that. So we'll hold off on that, Don, for the time being. Julian, why don't you proceed with your section?
Sure. So, yeah, so what we've been talking about is an issue that we've all been trying to figure out for months, how to do a sale when the seller is a PPP loan and the seller's loan won't be forgiven from the SBA, because that's not going to happen for months. And so that's one factor. Seller wants to both close their business as well as get their loan forgiven. The other factor is that there's another SBA program that says if you close your deal by Friday, September 25th, the SBA will pay the first 6 months of your SBA loan payments, which is a great thing for a buyer. And so that's something to keep in mind, because that encourages deals to close by the 25th. Because a seller could say, you know, I do want to sell my business, absolutely, but I also want to get my loan forgiven. So let's just wait around till December, January, however long it takes until my loan is forgiven. Once I get forgiven from the SBA, we'll close that. I mean, there's lots of reasons why that won't work. As all you brokers say every morning over your first cup of coffee, time kills deals. And, you know, waiting that long would be a nightmare to all of you. And I get it, you know, I totally get it. I mean, I don't want to wait that long either. I mean, that's a bad idea. But also there's the factor of how do you deal with the buyer's desire to get 6 months of free loan payments? I mean, so that doesn't work. So my view is this, and I'm going to give my thoughts if I'm the buyer's lawyer, and I'm going to give my thoughts if I'm the seller's lawyer. So buyer's lawyer, and I'm dealing with this right now, and you know, and I just had an email this morning. So I'm doing a deal that's a huge rush. It's closing hopefully this Friday. It's $2,260,000. You know, it's a mad rush to the closing table. No, it's a sign and close. You know, I'm sending schedules. I represent the seller. I'm sending schedules out today. It's a mad rush, and the buyer's lawyer representing a private equity group up in this skyscraper in Miami wants us to escrow the PPP loan funds, and I think that's totally unnecessary. So I'll get back to that in a second. So if I'm the buyer's lawyer, and I mean, I think most of the people know I do a lot of these deals, and over the course of a year, I'm probably 50-50. Half over any long period of time, half of my deals I represent buyers, half of my deals I represent sellers. So I flip back and forth pretty seamlessly. So when I'm wearing my buyer hat, I'm totally fine saying, let's close. We don't need to escrow the PPP loan proceeds. That's a buyer's issue, seller's issue. It's not a buyer's issue. The nice thing about the PPP loan program is these loans are not secured by hard assets. So when I'm wearing my buyer hat, I'm totally comfortable advising my seller, my buyer, let's just close. We don't care about that loan. That's no different from, you know, and we do deals all the time where the seller's responsible for paying their payables, paying their employees, et cetera. And we don't escrow the last set of payables. We let the seller receive the closing proceeds, pay their last expenses. And we're comfortable with that. We need to get loans cleared off, liens and loans. We need to get loans cleared off that result in liens being filed against the assets. As a buyer, we need to acquire the assets free and clear of liens or encumbrances. So if there are liens, we need to make sure that those loans get paid off. We can pay off statements, et cetera. So when I'm wearing my buyer's lawyer hat, that's my opinion. And having thought about it really a lot over the last couple of months since this issue rose to the surface. And it's funny, I had a conversation, I'm dealing with a bank, and basically I've known the lender for years. He reached out to me and said, because I reached out to him, because there's another prominent bank in town that's at least currently taking the position that the seller's PPP loan is due on sale. It needs to get paid off in conjunction with closing. Well, that's a nightmare, because if it's paid off, then it's not forgiven. It's just a nightmare. But this bank's taking the position, as I understand the argument, the way the bankers explained it to me, is that the bank's nervous about making sure that if the loan doesn't work out, that they could get the benefit of their SBA guarantee. And they're feeling if they don't facilitate getting seller loans paid in conjunction with closing, they run the risk of having their SBA guarantees not be honored, which of course is every SBA lender's nightmare. So that's the position that bank's taking. So that's Bank A. So I reach out to banker at Bank B, because we have a closing coming up, and say, what are you guys going to require? And basically the conversation goes, the banker says to me, what do you think? Do you care? Do you need this loan to be paid off? I go, no, I don't care. So the banker goes, well, if you don't care, I don't care either, which I thought was great. I felt like for once in my life, I had a lot of power and authority. And I got the answer I wanted because it changes the calculus of the deal. I will say this, Steve, put your hands over your ears. Do that. There is one clever broker who's dealing with the seller's PPP loan needing to get paid off in conjunction with closing, who's going to structure an earn out to the side, a quote unquote side deal, to sort of allow the buyer to pay the seller back for those proceeds based on a set of metrics that are a win-win. It's high, the dollars will be high enough that the buyer's okay doing it. And that's clever, but obviously impermissible. And but anyway,
Julian, I'd like to jump in just quickly. Earlier, Steve had mentioned that guidance to lenders would be coming out in a couple of weeks. So I think it's clear now that lenders, some of them are taking very conservative stances to protect their interests, and other lenders are being more flexible. But I just wanted Steve to be aware of that in the absence of SBA guidance, lenders are really at a loss as to how to address our business brokerage sale transaction issues.
Yeah.
And Julian, you can jump back in.
Yeah, no, that's fine. So yeah, so just in my own experience, buyer lenders are taking very different positions as to what the seller lender needs to, what needs to happen with that seller PPP loan. But again, as a buyer's lawyer, I don't need for it to be paid off. I'm totally fine with it just carrying on after closing, and it just being a seller issue post-closing. But not every buyer's lawyer is going to take that position again on this $2.2 million deal. I'm dealing with a buyer's lawyer at Skyscraper who wants to escrow those funds. This will be the third escrow in this deal, by the way. And it's a 50-page purchase agreement for a $2.2 million deal. The whole thing's ridiculous, but that's a whole other story. Okay, so now I'm going to flip. Let's say I'm the seller's lawyer. What's my view of this? So the problem is this. The whole issue arises because the PPP loan documents have covenants, like all loan documents do. And some of the covenants say you can't have a change of control without the consent of the lender. So if you were doing a stock or an LLC membership interest deal, that would obviously be a change of control. And you couldn't do that without the consent of the lender. And then the question is, what if you do an asset deal, which most of our deals are? And there's some language that maybe suggests that an asset deal also triggers a default and triggers the need for lender consent. And by the way, let me digress. So the reason we care about the covenants and whether you're in default is, there'd be an argument if you're in default, you can't get your forgiveness. Seller wants forgiveness. That's obviously key. And if they're in default, they can't get the forgiveness. So that's why they need. So my advice when I'm on the seller side is to say to my seller, you have to be communicating with your lender. You have to get them involved in this transaction and get them to consent to the transaction and say, I consent to this transaction. And notwithstanding that you've sold the assets, I will still process your loan for forgiveness. And I'll tell the SBA we consented to the transaction. So that's, I think, what needs to happen. And so, Paul, maybe this is a good time to put up that thing. Okay.
Can you see it, Julian?
I can. So I can see. I can see everybody on the side. So periodically, I do Google searches trying to see if there's any guidance on this question of what happens if you're trying to sell a business before the SBA has forgiven a seller's PPP loan. And so I did this the other day, and I came upon this white paper from a law firm called Morgan Lewis. Morgan Lewis is a gigantic law firm with hundreds and hundreds of lawyers, maybe more than 1,000, multiple offices, huge law firm. Anyway, they wrote this very long white paper, and this little gray box on page 8 is really the interesting part for our purposes. And I'm going to jump to the second paragraph of this gray box that says, the ability of a PPP borrower, which is the seller in our scenario, to seek forgiveness should not be negatively impacted if its business is acquired by way of an asset sale structure following the end of its forgiveness period. And I interpret the end of its forgiveness period to mean after it, using my example before it was Steve, after it has fully spent the PPP money, it borrowed $150,000, and it has now had $150,000 of payroll, rent, and utilities expenses. So it has fully spent that money. So I think that's what this means when it says the end of its forgiveness period. Assuming the borrower has obtained lender consent or a waiver, if required, and assuming the borrower satisfied the use of proceeds requirements during the relevant period, is not otherwise in breach, it should be able to apply for and receive forgiveness in accordance with applicable PPP rules and guidance. So as I read this paragraph, this is a lawyer in a skyscraper saying, you know, if you've gotten there's a seller saying, if you've gotten the seller's bank to consent to the transaction, and assuming that the seller satisfied the use of proceeds requirements during the relevant period. So we'd had 150,000 of expenses for eligible expenses, payroll, rent, utilities, and is not otherwise in breach. I'm not sure what that would be. It should be able to apply for and receive forgiveness in accordance with applicable PPP rules and guidance. So this is the most definitive thing I've found so far. Yeah, and it's surprisingly short and unqualified, you know, but I think it's great. I mean, that's the same conclusion I've come to when thinking about this over the last couple of months. But I was pleased to see a huge law firm say that so succinctly. Paul, you can put that down. Okay, cool. So yeah, so on the seller side, I think that's what needs to happen. And it just takes, everything in our deals, I always say, takes a lot of communication. The PPP issue just raises one more thing that requires communication. A seller needs to be talking to their bank and getting the bank's consent to a transaction. Yeah. So I think that's really all I have to say based on my experience. I mean, I'm seeing buyer banks take different positions about whether the SBA loans need to be paid off in conjunction with closing. I've seen one bank say yes. I've seen one bank say no, which is, you know, I prefer no. That makes things a lot easier. When I'm seeing some buyers' lawyers require escrows of the PPP money. If I were the buyer's lawyer, I would not require an escrow. Anyway, we're all trying to figure it out, and I'm seeing different people do different things in light of the uncertainty. It'd be great for one day. Steve, would you tell your higher ups we need firm guidance about all of this? I don't know what they're doing back in DC, but it'd be nice if they address this issue. This is something we need to know. So if you could tell them, that'd be great. So I'm open to questions if anybody has them.
Thank you, Julian. Well, we're still entertaining questions. If you have one, please enter it in chat. Don, before we get started on your real life scenario, Steve, a quick question from Merle. Can a startup with no prior payroll obtain a PPP loan? So the question from Merle, yeah, can a startup obtain a PPP loan?
It's gonna depend. On the SBA side, we define a startup as a business that's been operating for 2 years or less. So under the SBA definition of startup, absolutely. If you started up after January, the answer would be no. You're not going to have any payroll in the respective comparison to have missed during this product. So it's going to depend upon when you actually started up and when your employees were on payroll.
Okay, thanks, Steve. Don, I keep putting you off. I want to put you off again a little bit. Suzanne's making a editorial comment. Steve, just like to put it up to you. Suzanne wants to add that the SBA's goal of retaining jobs is consistent with the sale of a business. We're in fact recycling businesses, if you want to look at it that way, and we're keeping employees in place at a business location. So that's exactly what a sale does. And as business brokers, we're affecting sales here, and we're maintaining jobs for the American public. Thanks, Suzanne, for your editorial comment. Don, I'm going to turn it over to you. I'm going to ask to unmute, and if you would be so kind as to jump in and tell us about your real life scenario.
Yeah, so I'm going to take, it's really what Julian did, but I'm going to frame it up a little bit differently. Steve, this is a very specific transaction. I'll give you the details of the transaction. I have a set of questions at the end for you. So this particular deal, it's a $2.5 million transaction. There is a signed letter of intent with earnest money and motivated parties to get the deal done. The buyer has a funding commitment by their lender, hasn't gone through underwriting, but it's that initial commitment that they're able to get. So we know we're moving in the right direction. Definitely a targeted closing before that September 27 deadline. The impact being, if we make that deadline, the buyer's going to get $125,000 in payment relief, payment benefit off of their SBA loan. So that's certainly a motivation for the buyer. The seller has a $305,000 PPP loan. Let's assume the spending against that loan is all in compliance to receive forgiveness, because it will be. It will be spent. It came in the second tranche of money, so he didn't start spending until the middle of May. With the 24 weeks, he is estimating sometime near the end of August, he will have it all spent, can begin the application process, but cannot receive the forgiveness prior to the September 27 closing deadline, but can in fact apply for forgiveness before that deadline. So that will already have been done. We've had an initial conversation with the PPP lender, and they have pushed back. And they said, we're using SBA approved lending documents, which include the language that the company has to give prior written notice to the bank. And here's the beauty: if there are any changes to the company, and it requires written consent by the bank before those changes may take effect. Now, anybody who's run a business knows you make changes in the company every single day. I assume they're talking about a change in ownership, but it's not specified. So here is a lender who's pushing back on consent, but they're pointing the finger absolutely at the SBA, because they're saying we have an SBA approved lending form. And they're not prepared to step outside of the box, as you mentioned earlier, to resolve that without SBA guidance. And I think Julian was talking about the need for very specific and very formal guidance from the SBA to lenders. So, since you seem to believe it's okay, Steve, you seem to believe it's okay to allow a sale to go forward, how in the world can we persuade the bank to change their position? That's my first question. Second would be, do you know of any mechanism, if the seller were to pay this off, how in the world could a seller get that prepayment or that full payment of the loan refunded after the fact? Or would he just give up $305,000? So,
okay. So on the first question, our guidance to the lender is for change of ownership, you need to give, or rather receive prior written consent from the borrower. So that's we're talking to change of ownership, not business change. We expect businesses to change and pivot and do business and that kind of thing. Then secondly, it is in the lender's hands, because remember that these are not SBA dollars; these are lender dollars. So it's a lender's loan.
Let me just interject. Here's what they told me: it's not our loan. We're just the managers of the loan. It's the SBA's loan. That's the position this bank is taking.
It may be in the wording, but the SBA didn't lend the dollars. That the SBA is going to provide funding on forgiveness. So if everything's applied, then indeed the SBA is going to, at some later point after forgiveness, fund the lender to make up for what the lender gave out. But the lender lent the money, and the lender is 100% responsible. That's a lender's loan.
Well, I don't disagree with you. I'm just saying they're standing in the way of getting this done, and they're pointing the finger at the SBA.
So for that, I wouldn't mind speaking with them and letting them know we have put a mechanism in place under the realization that even though our intent was to power the business through the COVID-19 scenario, if a business chooses to not do that, then we've provided a mechanism for that to change if the lender's willing to do so.
That would probably be an important step in this process, is to get the lender to speak with you and the SBA and try and work this out.
Sure.
Because from what I'm hearing, you're saying without that consent, we cannot move forward with this transaction.
Well, on the actual transaction, sure, you can do what you want. I'm speaking on the PPP side of it.
Right. Well, right. 305,000 worth of mistake to go forward without the approval.
Right. I don't know why someone would do that, but if they want to do that and hold it, that's their choice.
I don't think they want to do that.
Yeah. Our assumption is, and granted, making assumptions, is that the seller would speak with the lender first before going anywhere else to say, hey, listen, here's our position. Here's what we're looking to do. We want your consent to be able to do this. Because I agree with the broker's comment earlier. I think that the sale or the broker of business transaction is a job creation tool, or at least a job retention. So the SBA is not interested in handcuffing anyone. That's not our intent. Our intent was to take the COVID-19 handcuffs off. Now, in our intent, we have put some other handcuffs on. Those have been inadvertent, and we're trying to adjust those, and this would be one of those. But yeah, so what you want to do is get the seller and the lender on the same page. If I could be a part of getting people on the same page, I'd be glad to do it. Having said it, to manage expectations, at the end of the day, it's still the lender's purview.
Well, I can't get them on the same page because the seller wants to sell and the lender wants the loan paid in full. So they're not on the same page. We can't make that happen. That's why the SBA stepping in becomes an important, so that you can communicate what the SBA's position is to the lender so that they can move in the direction of the seller's page.
Sure.
Okay. Don, did
Thank
that
you.
answer your questions? You get your questions out there?
Absolutely. It's
Okay.
Access to a resource. That's the number one thing we need at this point to resolve
Okay.
this.
Thanks, Don. Steve, question for you. Earlier, you commented that if a seller had a PPP loan and a borrower wanted to use a 7A loan to make a purchase, that
Yes.
even preferred lenders would have to send that loan to delegation to the San Diego office. I'm not familiar right now with the time frame for that. How many weeks or months does that add to the loan approval process? Delegation.
I'm afraid I can't give you an answer on that, only because, as you know, that this process is new to me and you and everyone included in the conversation. I would hope it would not be more than a couple weeks, but I don't have a time frame. I apologize.
Okay. Well, so I just wanted to, I think it's obvious to everyone that the September 27 deadline is coming up, and delegation would foreshorten that by a couple weeks or a month. We don't know yet. So a lot of our conversation today is about deadlines, and we're trying to work in this environment right now, and that's why these questions are coming up.
Sure.
With that, Kim, would you like to come on board and tell us your recent experience? And
so, in light of what Julian has said and what Steve has said, I'm afraid I'm gonna present something that looks a little cavalier. I closed on a deal last week. The seller had almost $150,000 in PPP loan. We had those loan docs reviewed by an attorney. What that attorney found was that an asset sale did not trigger anything in the loan docs. They specifically said a stock sale would be problematic and would require consent from the bank, but an asset sale would not. So the attorney recommended that the seller file for forgiveness prior to closing. The lender was not ready for forgiveness. They may not be ready now, but what the seller did was use the most recent forgiveness doc on the SBA website. They sent it registered mail prior to closing and after they'd reached 100% level of forgiveness. And then we closed on the deal. So what I'm hearing from others on this is that we might have just committed a giant faux pas. Because it was an asset sale, the seller is, you know, she kept her business entity and the records are intact for every penny that was spent on the PPP. So the hope is that she'll get forgiven, and it remains to be seen. We're kind of expecting that the lender will push back and say, oh, hey, you mailed us your forgiveness app. You didn't use our online portal that isn't even ready yet. Please turn around and resubmit. That's okay, but we've got this date from having sent the forgiveness application in by registered mail. Now, this was all under attorney advice. The attorney may or may not be right. We don't know how this is going to play out, but the bank was not informed and they did not give consent. So anyway, I don't really have any questions. Maybe I should, but it's already done. We already committed our grievous sin, so we'll see how it plays out. That's what I got.
Steve, any comment on that?
I sincerely hope that it's 100% forgiven and you can wash your hands and walk away.
We all hope that. Yep.
So if there are any questions from the audience, if you want to hit the chat button and put those up. I had a quick question. Go ahead.
I have a point.
Go ahead.
So something came up recently. So we're doing a deal in Paul in your fair city. And so the broker suggested, you know, as everybody knows, we usually change the seller's corporate or LLC name to something else. And it was suggested, the broker said, let's have the seller keep their corporate name. I mean, you could still take it as a trade name, buyer can still take it as a trade name. Let's have the seller keep it and not change it, because that might be helpful when the seller processes their PPP loan, that they don't have to process it in the name of a new company. That they've kept the company under which they applied and got the loan proceeds. And I was fine with that. And now I've flipped seats, and I've now got this other deal where I represent the seller, and I've asked to do the same thing. And in that case, we have trade names. We'll withdraw our trade names, but we want to keep our corporate name, which is way less important to the business. Most of the customers don't know our corporate name. They just know our trade names. So that's just something to think about, is maybe a little thing we should think. It's different from what we've done for a lot of years, but maybe it's something that makes sense to do. Let the seller keep their name. They're not going to use it in commerce. They're not going to violate their non-compete, but just let them keep their name, because maybe that'll be useful to them when they're submitting their loan forgiveness application, that they don't have to do it under a different name and confuse the poor SBA bureaucrat.
So question for Steve. PPP loan came through the bank under the original corporate name and EIN, and the forgiveness application comes through with the same EIN but a different corporate name. Would that be a flag to the SBA? Yes,
because the SBA is going to tie the EIN to two names. One, the DBA, and the owner's, or rather the loan applicant's personal name as well. Is that going to stop anything? No. Would it give SBA pause for thought? Yes. How that's going to work out at this time, I can't tell you. But I do know that it would probably cause confusion, and I'm going to guess, and this is a Steve White guess, this is not policy, that may cause a delay in the process for forgiveness.
Okay, thank you.
I'd like to say something. When our attorney was looking through the loan docs, what he did see was that a name change of the entity would need to be told to the bank. So after closing, the seller did tell the bank about the name change because the name went with the business. So anyway, pile on our sins.
Okay.
Yeah.
Thank you.
I mean, just to make sure everyone's clear, it used to be 20 years ago, you couldn't have two exact same names in the database of the Colorado Secretary of State, but that's changed over the years. So the seller could keep their corporate name and the buyer could add the corporate name as a trade name to their existing name. And both those things could currently coexist in the database of the Secretary of State. So the buyer gets what they need, the trade name that's exactly like the seller's name, but the seller gets to keep their name for purposes of applying for forgiveness. You know, the asset purchase agreement could say, we don't let you keep your name until you achieve forgiveness. After you achieve forgiveness, at that point, you're going to change your name to something else. So there's not confusion in the database of the Secretary of State. I mean, I think we're going to do that a couple of times in the next couple of months dealing with these PPP loans, is add that extra layer that says, keep your name for now. You have to change it later after you've completed your forgiveness process. I would be fine with that.
Okay, thanks, Julian. Steve, another question for you. The banks have 60 days to process the forgiveness applications. I believe the SBA has 90 days to approve that and then fund the bank. Have you seen that process in action on the SBA's? Okay, so you haven't seen the process, don't know the time frame in real terms at this point.
No, and again, I apologize. We were supposed to have that out 2.5 weeks ago. Obviously, we on this call, we all know that we don't have that process. I haven't seen it. We've been told that it's going to be a digital process for the lender input. They'll probably tie that to what's called a 1502, a monthly accounting report, just for ease of transfer of funds and that kind of thing. But we haven't seen the process yet, so apologies.
Okay, thank you, Steve. We're at the top of the hour. Any other follow-up comments from our speakers today? I'll just make a statement that Don submitted. This is Don's summation of today's call. It seems that bank consent is the largest impediment to getting deals done right now. Banks don't have a clear position from the SBA. Or at least they haven't indicated that they do. And it seems to be the most important step for the SBA to address. Tonya has a comment.
So one of the things I wanted to say from a bank perspective is to you, Kimberly, is a lot of banks aren't even accepting applications currently for forgiveness from their borrowers because they don't have guidance, as Steve said, as to how we are supposed to actually submit them. And so because we're on the deadline of when they're submitted to us, then we have the deadline with SBA of when we get them submitted and get that going. Many aren't even allowing it based on the fact that there's no guidance. And so it's kind of a chicken and egg scenario. So.
Okay, thanks, Tonya. A question from an anonymous source for Steve. Any truth to the rumor that the SBA is considering blanket forgiveness for PPP loans under $150,000?
In the Steve White world, Steve has forgiven everyone, and we'll make this process easy.
Okay.
No.
Okay. Thank you, Steve. That's going to conclude our call today. I want to thank our presenters, Steve White, SBA Colorado, Julian Isbicki, attorney, sustaining sponsor of CABI, Tonya Mazurek, CABI board member, lender with Midwest Regional Bank, Don Hobbs, broker with Front Range Business Incorporated. Kim Rivero, CABI board member and broker with Front Range Business Incorporated. I'm going to briefly put the names of our presenters on screen, and this presentation has been recorded, and we'll send out a link later on today, and everyone can have access to the recording after. So with that, I would say thank you very much, and appreciate all of your help today, and let's get some deals done.